Hello, everybody. Welcome to Wednesday. The S&P 500 was down 2.25% today. Really started off with NVIDIA and some of the other chip companies, basically disclosing that the White House had contacted them saying there was going to be some big levies on these H20 chips, which is sort of a dumbed down chip that they're allowed to sell to China. Effectively, levies are so high, it's a blockade. They won't be able to sell any. NVIDIA gets a good chunk of change out of those sales. So they were going to take a $5.5 billion write-off on this. And so, this is an ongoing thing. The White House is concerned that they could use those chips and supercomputers, even though it seems like there are other chips out there that are of similar design. So it just kind of sticks it to NVIDIA, unfortunately, in this particular case. And that was a surprise after the CEO from NVIDIA went to Mar-a-Lago. It was considered, this was a settled issue, but nothing seems to be a settled issue, unfortunately, at this point in time. And then the Federal Reserve Chairman Powell was at a conference type setting today in Chicago. Was that pretty much flat out, would they be, the savior of the market, so to speak, what they call the Fed put? And he said no, flat out, basically throwing the equity market under the bus. He said, there's no way we can tell what the impacts of these tariffs are going to be. We don't know what the tariffs are. They're changing too often. So, we're going to sit back and wait and see how things go. We can't make moves in this particular environment because you could have a situation where, inflation is going up because of these tariffs and, the growth of jobs is going down. Right now, the growth of jobs is doing fine. A lot of people are pre-buying before these tariffs, and actually, I think we're probably going to see a little bit of an economic, hit to the upside because of that. I guess the concern is more just the longer term. And again, the longer term could be we don't have all these tariffs, but right now, the tariffs are in that 27 to 24% range, depending on who you listen to. It was 2.2% average tariff prior to inauguration. So these tariffs are 10 times higher than they were. Even if we get back down to the 10% tariffs, it's still more than 4 times higher than we were. So, that's a lot of money coming out of the economy, whoever's paying it, whether it's a foreign country or us or you and me or whoever it is. That's a lot of money coming out of the economy. And so that's where I think the concern is, and there's not been a lot of talk about how you can push this money back out. There has been talk about pushing money back out in terms of tax cuts, but I guess I got a question, how do you do that? Because what happens is if you want to do full on tax cuts, where you could possibly count the income from tariffs, you need 60 votes in the Senate. I don't think we're going to see that. And so then you use what's called a reconciliation process, which is where you only need 50 votes, which they have at this point in time, theoretically. But in reconciliation, you have to be able to match. So if you cut, your revenues by reducing taxes, you have to then, increase your cuts, in spending. And so that becomes this big issue. That's why Medicaid is on the table and all these different things to try to make these cuts come through. But you can't use tariffs in that calculation. So how do you get this money to flow back in through? Because Peter Navarro has been talking a lot about, hey, this is going to create all these big tax cuts we could do. We could really lower taxes. How are you going to get that through Congress? So that's an interesting thing. Maybe, the Republicans take over with a big majority after the midterm elections and they get it done. But historically, the incumbent party does not take over after the midterm elections. It usually goes the opposite way, lose at least one of the chambers. So if that happens, it would be very difficult to see this, happening the way it's going. So that's where we're at. You've got this kind of confusion for consumers and CEOs, and even the Fed chairman is expressing some of that same sentiment. It's why you want to have, I think, a reduced exposure to the stock market for a while. And if it continues to erode and we don't see progress, I mean, we need to see progress really soon here in terms of talks starting with China, because 145% tariff is going to be detrimental. Yeah, they gave, a little exclusion to Apple, which is great as far as that goes. But there are a lot of small businesses that rely upon tariff, imports from China, making toys. I think China makes over 80 some odd percent of the toys of the world. All these different things that are, that these businesses have been running on forever. They've got inventory maybe for a month to 3 months, but when that runs out, they can't afford these products, and nobody's going to buy them when they're that expensive. So, we all assume those tariffs are temporary, but the longer they're there, the more danger you have of really kicking off something that we can't get back. And I guess that's the biggest concern. So, we have a half of our normal exposure to stocks. Again, could reduce that. at some point in time if things continue to get worse. If we start to see some good progress on China, maybe we should be increasing that as far as that goes. We'll have to see how that plays out. But really amazing time frame right now, in terms of what the stock market is used to. I mean, last year was 57 new all-time highs. This year we're told that we're going to end up with this great situation. We just have to wait through it, but it's not clear how we get there. And I think that's one of the problems we have in terms of the messaging and such too. Yes, okay, maybe we have no taxes or income taxes. It's all paid by tariffs. The numbers don't add up because tariffs can't be high enough to pay all of the money into the government. But how do you even get those through at all? As far as that goes, because we can't count tariffs in the reconciliation process. So it's an interesting game that we're playing to try to make this work, and we'll just keep an eye on it and keep on rolling with it, and we'll make our adjustments to the portfolios. The bond market did well today. T-bills that we're invested in were all up today, and almost everything we had actually was up today, except for the stock market exposure that we still have. So anyway, look forward to being able to talk to you tomorrow. Thank you very much.